Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehisha. With me is Ashesha Azbariu. And this is a show where we'll be taking you through all the big buzzers in today's trading session. Mind you, there are lots of newsmakers today. So we'll be quickly covering all of these in individual stocks within a minute each. So before we get started with the show, let's just take a look at what the markets are doing right now. And Ashesha, it's been rather range bound. And we have tried touching that 25,000 mark a couple of times today. But it looks a little shaky today.
Well, absolutely shaky for the Indian markets. We are off from the day's highest point, but despite that, turning out to be a great start for the week. Nifty is now nearing that 25,000 odd mark. Nifty Bank up 75 points. Although Nifty Bank is an underperformer in trade today, comfortably sitting above that 55,000 odd mark. But auto stocks are firing in trade today. We have Tata Motors, Bajaj Auto, we have M&M, Hero MotoCorp. All of them amongst the top gainers from the Nifty Auto Index. On the flip side though, we have individual sectors, PSU banking stocks. That's the pocket which is not gaining in trade today. We have Bank of Baroda, which is down 0.6%, Bank of India, which is down 0.3%, Maharashtra Bank, Punjab and Sindh Bank, Indian Bank, all of them trading with losses in today's trading session.
Okay, so that's the way the markets are shaping up right now. In the green, but slightly off the day's highest point. On that note, let's get started with the show, and let me welcome on board Sameet Chavan, the Head Research Technical and Derivative at Angel One, who's joining us on the technicals. And from our in-house research team, we have Rabinder as well as Kanishka joining us. Good afternoon to all of you. Before we take it across to you guys, let's talk about the big newsmaker right now, and that's JSW Steel. There's a big relief coming in for JSW Steel as the Supreme Court has ordered status quo on liquidation of Bhushan Power and Steel after JSW and the COC say that it will prejudice them since they are intending to file a review. SC says status quo needs to be maintained in the interest of justice and the status quo to be maintained till the disposal of the review petition. Sharp spike coming in the stock ever since this news flow has come out. Stock is up 2.5%. But Rabinder, you've also picked up this stock on the back of its earnings and what brokerages are making out of it. So take us through the other piece of news that's influencing JSW Steel in today's trade.
Well, as JSW Steel has also announced its Q4 number, and company reported company's revenue was above 80 pole, but margin was slightly below estimate. Revenue saw an uptick of 8% on a sequential basis, led by volume growth, and standalone volume was at 5.77 million ton versus as compared to 5.59 million tons, up by more than 3% quarter-on-quarter basis. And company has given a guidance for FY26 where they have said that the consolidated crude steel production guidance was at 30.5 million ton, and consolidated saleable sales guidance was at 29.2 million ton. And there are also some brokerage note coming in where Motilal Oswal has come out with a note on JSW Steel, and they have maintained the buy rating with target price of rupees 1,190, where they say that the operation performance of the company was in line, and they have largely maintained Motilal maintained the FY26 and 27 EBITDA estimate. So back of the Q4 earning, JSW Steel is also in focus.
On the back of results, brokerage reports and now Supreme Court hearing, JSW Steel is in focus on the back of several news pieces. But apart from that, Apollo Hospitals. Sameet, you've picked up this stock for us. The stock is currently at 7,100 odd levels. What are your targets on this stock?
There's an interesting chart pattern that is, clearly happening since last few days. We can see a bullish pennant pattern, getting breached in the upward direction. So stock has already broken out from its important cluster of 7,000, 7,050 on an intraday basis. In case today we see a follow-up move and gives a close beyond 71.20, then this breakout is confirmed, and then the potential target for this particular stock would be around 70,300, 70.20 over the next few trading sessions. So overall trade setup looks quite encouraging, and it's a buy at current level. Any dip would be a good buying opportunity considering the risk to reward ratio. One can keep a stop around 69.50. We expect 7,000 to 6,950 to act as a very strong support. So keep a stop around 6,950, and the immediate target would be around 7,300, 7,320. And as a disclosure, we have recommended through call option to our clients as well.
Okay, so that's Sameet's take on Apollo Hospitals and the levels to watch out for. Let's move on from there and talk about a stock that's not doing all that well in today's trade, and that's Glenmark Pharma today on the back of its quarter four numbers and what brokerages have to make of these numbers as well. Stock lower by almost 3% as we speak because we understand that quarter four has missed street estimates. Revenue has come in at 3,256 crores compared to 3,063 crores, which is up 6.3% year on year. This time, however, they've incurred a profit of 4.6 crores versus a loss of 1,242 crores this time last year on the back of an adjustment. EBITDA has come in at 561 crores compared to 504 crores, which is up 11.3%. EBITDA margins have also seen a little bit of an increase at 17.2% compared to 16.5% year on year. However, if you talk about what brokerages are making of this, Nomura has come out with a note wherein they maintain their neutral rating with a target price of 1,500 rupees per share, but they also marked that quarter four has been below street estimates. Overall, FY25 guidance has also been missed by the company, and the company has incurred an exceptional loss of 370 crore rupees this time, which has impacted net earnings significantly. Now, except Europe, all other segments revenue have been lower than estimates, and India's revenue growth has also been just 0.4% year on year, which is much below its other pharma peers. So that's the take on Glenmark Pharma. Stock under pressure because quarter four estimates have been missed and FY25 overall guidance also missed, or 2.7% cut on the stock as we speak.
2.7% cut on Glenmark Pharma, but let's also talk about another stock which is under pressure today, and that's Zomato, or Eternal as we now call it. The stock is down 4% after brokerage reports suggest that perhaps weightage of Eternal could fall in both MSCI as well as FTSE index. In fact, brokerage houses estimates also suggest that this could lead to outflows of about $840 million, and this follows a reduction in foreign ownership limit of the company from 100% to 49%. In fact, reports also suggest FTSE weight reduction could lead to outflows of about $380 million, which could happen on the 27th of May, and MSCI weight reduction could lead to outflows of $460 million, which could happen on the 30th of May. So on the back of this negative news flow that has come in, the stock is down 4% today, but remember, it is down nearly 25% from its 52-week high levels. So the stock has seen quite a bit of correction over the last few days.
Okay, steep cut coming in on Eternal. Also a reason why the index is largely range bound today, because remember, Eternal is now also a Nifty 50 stock. But let's move on from there, and Ravindra Balakrishna Industries, BKT, is the stock that you've picked out for us. Tell us what the earnings fine print looks like for this one.
Well, as Balakrishna Industry is in focus, where company has announced its Q4 number, and company reported revenue at rupees 2,752 crore, which was up by 2.5% year-on-year basis. And if we talk about net profit, then net profit was down by more than 9% year-on-year basis, and margin also saw a decline of more than 300 basis point year-on-year basis. So mixed set of number of Balakrishna Industry in Q4, but company has announced an entry in new segment which poses challenges from being a niche off-highway truck players. Balakrishna has announced an entry in the domestic TBR and PCR at a capex of rupees 30 billion, and over the medium term, an increasing presence in the domestic TBR and PCR segment is likely to be challenging considering the high competitive intensity with several established incumbent mass market tire companies. The tire companies in this segment have lower level of profitability with EBITDA margins of less than 15% as compared to Balakrishna Industry margin of 25%. So back of this news, stock is down more than 6%.
He is entering a low margin segment, and on the back of results that it's reported, the stock is down 6.5% today. But Bajaj Finserv, that's another stock in our list today. And Sameet, tell us, why have you picked up this stock for us today?
See, recently, if you see, stock prices went into a consolidation mode, but since morning we are seeing good traction in this counter. There has been a defined range for last 3-4 weeks, wherein on the higher side, whenever the stock reaches 2050, 2060, some sort of rejection happens, and on the lower side, 2000 seems to be a very strong support. So it was trading in a slender range. The kind of momentum that we have been witnessing since morning, it suggests that stock is likely to come out of its recent slumber phase. Hence, we are anticipating this breakout to happen on a closing basis as well. And the immediate targets to watch out for would be around 2100, 2120, and on the lower side, 2000, 2020 to act as a very strong support. As a disclosure, again, we have recommended this to our clients, with the call option.
Okay, so that's Sameet's take on Bajaj Finserv and the next key levels to watch out for. But Kanishka, coming to you, JK Cement is the stock that you've picked out for us. Strong set of quarter four numbers coming in. Stock is doing pretty okay today. Take us through the earnings fine print.
Absolutely, Snehi. Well, JK Cement has delivered a very strong Q4 performance with net profit that surged about 64.5% year-on-year to 361 crore rupees. Revenue, on the other hand, has seen a jump of 15% on a year-on-year basis, crossing the 3,580 crore level. The EBITDA was at 736 crore rupees in Q4. That's a 34.5% uptick compared to the previous year. Margin too expanded to 22.03%. Now, this performance was driven by multiple tailwinds, higher volumes, better price realizations, and also operational efficiencies. Now, JK Cement is also during the quarter installed a grey cement capacity of 24.34 million tons per annum. Additionally, it is one of the leading manufacturers of white cement with a total white cement capacity of 1.12 million tons per annum and wall putty production capacity of 1.3 million tons per annum. Now, all in all, JK Cement's Q4 print reflects a solid mix of demand, strength and smart execution as well. Now, if you look at the stock following the result, it's up almost 4% in trade today. In fact, so far this year, it has seen a rally of more than 15%.
Okay, so that's the take on JK Cement. Strong numbers, stock up almost 3% as we speak. Let's speak about Concor. Remember, numbers came out last week and it was a weak quarter for performance. The company has also announced a bonus issue. Remember, margins had come in at 19% compared to 21.1%. So weak numbers coming in. But today the stock is doing pretty okay on the back of some brokerage conviction coming in on the stock. Jefferies has maintained their buy rating and hiked the target price to 825 rupees per share. They do note that quarter four was their EBITDA was 19% below estimate. The management had guided for 13% year-on-year FY26 volume growth, led by steady 10% year-on-year EXIM volume growth. So that is something that they are liking. And strong domestic volume growth has been guided at 20%. However, on the flip side, they've lowered their FY26-27 EBITDA by 1 to 6%. And they're saying that connectivity to JNPT is a key catalyst for the stock. You also have Nuvama that has come out with a note saying Concor has posted a weak quarter four with volume inching up 1% year-on-year, while the 6-year CAGR was 2%. And MOSL has, that's Motilal Oswal, has reiterated a buy with a reduced target price of 850 per share. HSBC has maintained their hold rating on Concor but also reduced price to 740 per share. So brokerages are also largely bearish, but on the back of a Jefferies price hike coming in to 825 rupees per share, Concor is up 1% as we speak.
Concor is up 1% on the back of brokerage reports that have come in, but auto stocks are in fast lane today, and Bajaj Auto, one of those stocks that Sameet has chosen for us today. The stock is up nearly 1 to 2% in today's trading session. Tell us, what do charts indicate over here?
In fact, since last few days, this stock has been buzzing. Overall, if you see on daily time frame charts, we can see upward trend reversal with the higher highs, higher lows, and with stock surpassing its important resistance of 8900 today itself. We can see a bullish flag pattern breakout as well. So the next important resistance to watch out for would be around 9300, 9350, which coincides with the 200-day simple moving average. The overall chart structure looks quite encouraging, and if you see the momentum oscillators, RSI is pointing upwards, which is again a sign of strength. So we remain a bit on this stock at least for next few days. This stock is likely to do well.
Okay, so bullish outlook coming in on Bajaj Auto. Sameet expects the stock to do well, but on that note, viewers, we'll slip into a very short break and be right back with more buzzers on the other side.
Welcome back. You're still tuned into Market Fatafat right here on ET Now, and we've seen a steady uptick once again over the last 15 minutes, and Nifty is now yet again nearing that 25,000 odd mark. But this is a show where we take you through all the buzzers in trade today, and for now, let's put the spotlight on Paytm, because this stock is also trading at the highest point of the day, up nearly 3 to 4%. And this is on the back of a Supreme Court hearing where Supreme Court has now stayed a GST demand order of about 5,712 crores on one of companies' private subsidiaries, which is First Games Technology. In fact, the show cause notice was sent to the subsidiary because DGCI took a view that company should pay GST liability at about 28% versus 18% which the company currently is paying. And the Supreme Court order also says that further proceedings of all the show cause notices shall be stayed for now. So some important news and positive news coming in for Paytm, because of which the stock is soaring in trade today, up 3% as we speak.
Okay, so that's the take on Paytm, doing very well in today's trade. Let's move on from that. And Ravinder, Narayana Hrudayalaya is the stock that you've picked out for us. It seems to have been a good quarter four that the company has seen. Take us through what the earnings look like.
Well, as Narayana Hrudayalaya has announced its Q4 number and company reported revenue at rupees 1475 crore as compared to 246 crore. We saw an uptick of 18.5% year-on-year basis, and company's net profit also saw uptick of 3.5% year-on-year basis from 190.7 crore to 197.2 crore. And if we talk about EBITDA and EBITDA margin, then company reported EBITDA at rupees 385 crore as compared to 315 crore with an uptick of more than 22% year-on-year basis, and margin also saw a good uptick of 81 basis point year-on-year basis from 25.3% to 26.1%. So back of the strong Q4 earning, stock is up more than 2.5%.
Stock is holding up 2.5%. Narayana Hrudayalaya, that's the stock that we're talking about. But apart from that, ONGC, why is this stock buzzing in trade today, Kanishka?
Well, ONGC is in spotlight today as the production is officially resumed at the offshore PY3 oil field in the Cauvery Basin after a 14-year pause, that is. Now, this marks a major milestone for the ONGC-led joint venture, which includes Hardy Exploration and Invanaya Petrodyne. Phase 1 of the field's revival included subsea infrastructure upgrades. Now, this field produces high-quality light, sweet crude, and with Phase 2, that is set to introduce new wells and enhance recovery techniques. And with that, expectations are high for a production ramp-up. If you look at the stock movement following this development, over the weekend, now ONGC shares are trading almost about 1% higher.
Stock is up 0.8% as we speak. That's as far as ONGC is concerned. But another stock that's buzzing based on its earnings is GNFC. In fact, the stock is up 6.5% in today's trading session after it reported very strong set of numbers. Revenues have come in at 2,055 crores, which is an uptick of a solid 8.2% on a sequential basis. Margins too have expanded in the quarter gone by. So EBITDA margins, they've come in at 11.7% versus just 7% that the company had reported in the third quarter. So on a sequential basis, margins have expanded by a solid 500 basis points, and that is what is aiding the stock in today's trading session. The stock, as we speak, 549. It's up about 7% in today's trading session. But Sameet, on the technicals, what do you suggest for this stock?
Clearly, this stock has been a laggard since last 1.5 years, but the kind of massive price and volume breakout that has happened today, stock prices literally took off. It suggests that the stock is likely to come out of its recent slumber phase, and it's an early sign of revival as well. So immediately, the next important cluster to watch out for would be around 580-85. Again, coincides with the 200-day simple moving average. But the kind of volume participation that we are witnessing along with prices and the placement of momentum oscillators indicates that the stock is likely to surpass 580-85 as well in the near term. So next, important resistance lies around 620-640. Any dip would be a buying opportunity, and on the low side now 520, 510 would act as a very strong support.
So that's the take on GNFC, why the stock is in focus in the back of fundamentals as well as the technical check coming in from Sameet. Let's talk about Lupin, another stock that is in focus, and Lupin has entered into a license and supply agreement with Stein Cares, which is a leading specialty healthcare company in Latin America, for the commercialization of the company's biosimilar ranibizumab across Latin America, excluding Mexico and Argentina. Now, this drug is a medication used to treat eye conditions, and under the terms of the agreement, Stein Care will handle all regulatory filings, registrations, and the commercialization of this drug in LATAM, while Lupin will be responsible for the manufacturing of the same. So that's the agreement coming in between Lupin and Stein Cares in Latin America. The stock has given up the gains it was seeing in the first half of the trading day, absolutely flat as we speak.
But from one pharma company to another then, Divi's Laboratories, that stock is surging in trade today, up nearly 3.5% as we speak. Rabinder, why is the stock buzzing in trade? What's the news flow?
Whereas company has signed a long-term manufacturing and supply agreement with global pharma company, and under this agreement the company will be manufacturing and supplying advanced intermediaries as per commercial terms agreement agreed between the two parties, and company expect meaningful revenue contribution from the long-term agreement, and the cost of capacity addition for manufacturing under this agreement is estimated to rupees between 650 to 750 crore. So back of this long-term manufacturing supply agreement, stock is up more approx 4%.
That's the fundamental reason why Divi's Labs is in focus. But Sameet, you've picked up Divi's Labs on the charts for us too. When I pull up the charts, last 6 months, a 10% move coming in. Last 1 year itself, the stock has seen more than 50% return. What's the take on this one? Do you believe this momentum is here to stay, or time now for some slowdown?
Clearly, the momentum is here to stay. The kind of price action this particular stock has seen over the past 6-8 months, it has already given a stellar move. It has been one of the rank outperformers within the pharma space, and we can see a series of higher highs, higher lows in all time frame charts. As we speak, stock prices are trading at all-time highs. It has already entered an uncharted territory. So projection wise, important level to watch out for would be the psychological mark of 7,000. We expect 7,000 to be crossed soon. So overall, the stock is a buy on dips candidate. On the lower side, previous resistance of 6,000, 6,100 would act as a very strong support. So
Buy on dips candidate, that's the word coming in on Divi's Laboratories. But let's also put the spotlight on LIC. Kanishka, why is the stock in focus today?
That's right, LIC is in focus today. Now it is planning for a digital revamp. ET now learned from sources earlier that the phase 1 of its DIVE project, so the Digital Innovation and Value Enhancement, is likely to go live by the month end. Now, the board approval, this will come after a board approval on May 27. Now, the super app will integrate all agent platforms, transforming how LIC's 5 lakh agents onboard customers and manage policies. In fact, following the ramp-up, policy surveying, claims and onboarding, all of it shall become paperless. LIC agents will get CRM tools and real-time dashboards via DIVE to track their leads. LIC is positioning itself as a potential game changer with this new insurance tech. Now, if you look at the stock following the development, it's up more than 1% in trade today.
Okay, holding up well. That's LIC, a percent of gain coming in on that stock. But on that note, time now for once again to slip into a very short break, and we'll be right back with more buzzes on the other side.
If you like this video, then like, share and subscribe to ET Now.